Welcome to Informed Investor. The Indian stock market has been on a roller coaster ride lately, with 5 consecutive months of downturns leaving investors and businesses on the edge. And just when things couldn't seem to get worse, the wires and cables industry has started bleeding too, thanks to a surprising new entry. UltraTech Cement, which is India's largest cement manufacturer, is planning to enter the wires and cables sector. This move has sent shockwaves through the industry, causing the shares of existing players like KEI Industries, Polycab India, Havells India, and Finolex Cables to tumble by up to 15%. Now, before we dive deeper into the news, let's take a moment to understand who we're dealing with. To give you a backstory, UltraTech Cement is a titan in the Indian cement industry and boasts to be India's largest and the world's third largest cement manufacturer, with a production capacity of over 154 million tons per annum. Known for its high-quality products and extensive distribution network, UltraTech has been a key player in India's infrastructure and construction boom. Another point to highlight is that UltraTech is part of the illustrious Aditya Birla Group, one of India's most respected and diversified conglomerates, with a presence in several sectors like telecom, metals, textiles, chemicals, financial services, and so on. The Aditya Birla Group is a household name in India and globally. This group is known for strong market presence and strategic expansion, so when they make a move, it's worth paying attention. Now, on Tuesday, February 25th, 2025, UltraTech Cement made a significant announcement through an exchange filing after market hours. It announced its plans to enter the wires and cables segment through its building products division, aligning with the strategy to become a comprehensive building solutions provider. Here are the details of the plan. UltraTech sees this move as a natural extension of its existing business. The wires and cables industry is closely tied to the construction and infrastructure sectors, where UltraTech already has a strong foothold. Additionally, at the group level, this could be somewhat of a forward integration. As you know, copper and aluminium are key raw materials for the wires and cables industry, and Hindalco, a metals company and more importantly a part of the Aditya Birla Group, could benefit the sourcing of these metals, giving a head start to UltraTech's wires and cables division. The company will set up its first manufacturing plant in Bharuch, Gujarat, which is expected to be operational by December 2026. For this, UltraTech would invest 1,800 crores over the next 2 years. The wires and cables industry has been growing at a healthy compounded annual growth rate of around 13% between fiscal year 19 and fiscal year 24, driven by demand from residential, commercial, infrastructure, and industrial sectors. Additionally, with a migration from unorganized to organized market to the wires and cables market, the overall outlook remains positive, making it an attractive market expansion for UltraTech. However, on the flip side, shares of UltraTech witnessed a decline by 5% today. The strategic move of entering the wires and cables industry is raising concerns among investors regarding UltraTech's capital allocation strategy and its plans for debt reduction. Additionally, the focus from its core business of cement to wires and cables are causing some kind of concern for investors. Now, UltraTech's announcement of entering this space has sent ripples through the wires and cables industry. The immediate effect of this was felt on industry players. Shares of wires and cable companies such as KEI Industries, Polycab India, Havells India, and Finolex Cables declined significantly by up to 50%, reflecting investor concerns about UltraTech's disruptive potential. Secondly, the foray of UltraTech means increased competition for existing players. Currently, Polycab dominates the wires and cables market with 18.1% market share. With UltraTech's brand reputation, financial muscle, and distribution network, UltraTech could pose a threat to existing players and lead to market share erosion. Now, as UltraTech scales up its operations, it could lead to price wars between competitors, squeezing margins to smaller players. Now, all in all, while established players have their own strengths, UltraTech entry is undoubtedly a cause for concern. Now, interestingly, the management of KEI Industries and RR Cable have expressed optimism about the industry's ability to accommodate new entrants. Anil Gupta, chairman and MD of KEI Industries, believes that UltraTech will not disrupt the market by slashing prices and expects it to take several years, at least 3 years, for UltraTech to establish its brand presence. Similarly, RR Cables management does not view UltraTech's entry as a significant threat, suggesting that the market has enough space for new players. Now, if we look at the brokerages, they have mixed views as well. JM Financial remains optimistic and mentions UltraTech could achieve 4 to 5 times of asset turns depending on its manufacturing and distribution ramp. JM Financial estimates it may capture 5% of the wires and cables market and double-digit shares in the wires market alone by fiscal year 20. Following this, Citi noted that the 1800 crore investment may slightly dilute its cement pure play status. However, it expects the wires and cables segment to generate 1,200 crore in revenue by fiscal year 27. Lastly, Nuvama expects UltraTech's entry to cause temporary disruption but sees a limited overall impact on the C&W sector, which is projected to grow at a healthy 38% CAGR. By FY28, UltraTech may hold under 5% market share, leading to the shift to organized players. Now, to conclude, the entry of UltraTech Cement into the wires cable segment marks a significant development reminiscent of Grasim Industries' successful foray into the paste industry with Birla Opus. In fact, Birla Opus management is optimistic and targets 10,000 crore revenue in the next 3 years. While it's uncertain whether UltraTech will replicate this success, the potential for disruption is clear. While risks like feasibility, increased competition, potential price wars, and challenges in absorbing the new capacity remain, only time will tell how this plays. But one thing is certain, the wires and cables industry is about to become more competitive than ever. Now, before I finish the video, let's quickly list out some important market updates. Airtel and Tata Plate, formerly known as Tata Sky, are discussing merging to strengthen the telecom and D2H services. This move will enhance Airtel's ability to compete with rivals like Reliance Jio in India's competitive media landscape. Secondly, Vedanta shareholders have approved a demerger plan, splitting the company into 5 distinct units, focusing on oil and gas, metals, power, copper, and zinc. The move aims to streamline operations, reduce debt, and attract more investors' attention to individual sectors. SpiceJet reported a net profit of 26 crores for Q3 of FY25, marking its return to profitability after 12 consecutive quarters of losses. The airline benefited from increased air traffic, cost control measures, and better demand in the domestic market post the pandemic. Next is Amantha-led board, a leader in the Indian audio and wearables device market, plans to launch an IPO in fiscal year 25 to raise 2,000 crore. The IPO will include a fresh issue of equity shares and OFS by existing investors. The funds will support expansion in the growing consumer electronics sector. Lastly, Go Digit Insurance invested 30 crore in Dr. Reddy's to acquire a 0.32% stake, signaling its interest in expanding partnerships within the health and insurance sectors. Now, having said that, this is me, Havells, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.